Good evening and welcome back to KWC. And as usual, it's the end of the month. We're going to look at what happened in the previous month in October, and then I'll give you a glimpse of what we can expect in November, especially with regards to the US elections, which is creating a lot of volatility in the market right now. So let's look at the monthly performance. If this is what we've achieved so far in the last one or 2 months, and this is how it's looking so far. Almost 12% return on our investment in the short-term cash side. Uh, I'm only carrying forward a few. Ashok Leyland, which is actually a long-term trade, so I haven't touched that. Sale is another long-term trade, so I just left it there like that. But then there's a few like India Bulls Housington, which I've been sitting on a loss for a while. I need to probably average it out now. And then there's IRCTC, there's ATC, and Granules and Parag that I entered towards the end of the month, which hasn't moved much. So I'm just holding them. But for most of this, you can see most of them I booked out. I would enter. This is not updated because the last day I've entered a few new trades for the last 2 days actually. That's not updated on the short-term side. Those include Reliance, TCS, Sun Pharma, TVS Motors, SBI Life, and so that's 5 trades that are not updated yet. But this was basically trades that I did during October on the short-term cash trade side, and you can see that's a huge increase. Okay, 12% return. By the way, in that month, in October, I think the market moved about 2 to 3%, if I'm not mistaken, somewhere in that range, because of the huge volatility. Actually, if you look at it, it moved from 10,800-ish on September 28th, and it went up to 12,025, but it closed at 11,640 yesterday. So there's a lot of volatility. October 1st, I think, it opened at 11,300 something, 360, and then it closed at 11,640, 650. So that's been an issue. Huge volatility. I think the volatility is basically mostly because of the global cues, the US elections, and so it's been a crazy month. We saw a huge upswing in the first 2 weeks, and then the last 2 weeks have been up and down, up and down, up and down. So it's been a little difficult. Volatility has increased a lot, which I will go through later on. Okay. Now so October 1st, the Nifty was at 11,364, and it closed at 11,640 yesterday on October 30th. So actually, it's only increased by about 2.5%. On the FNO side, though, the target that KWC achieved was 8.1%, and you can see that here for a total investment of almost 49 lakhs. We saw a profit of almost 4 lakhs or 8%, 8.1%. And I have a lot of interesting stories. This 1 month was a very difficult month because initially the prices went up so high, and then there was a huge volatility. So some of these shares I have struggled with. If you look at some examples, which I'll point out, it's funny. Okay, I'll illustrate this for you. Now, two of the best trades that I did, or there's a few more also, but Asian Paints, I bought it at 9,950. Why is showing 9,990 here? Is because in between I got out and then I re-entered when it went up again. So to reflect the difference of the share prices, that I actually didn't get that much return. I increased the entry level price in my Excel sheet, but actually I entered at 9,950 and I closed out at 2,200 plus. But because I had exited out in between, there was a 40 rupee difference that I had to show. So that was that. But what happened here was also my hedging was really good on Asian Paints, and I was really happy with the returns that I saw in Asian Paints. If you look at the overall return, it was almost 47%. A 47% return on Asian Paints was a huge return over there, almost 80,000 rupees. Tata Chemical was another one. We entered at about 288, we exited at 318. It went to 326 yesterday, but again, but the all of these we closed on October 29th on Thursday. So again, what was incredible about Tata Chemicals was the hedging was really good. You can see that the hedging really worked out well. And because the hedging really worked out well, I saw almost 73,000. If you look at this, TCS, I made almost 1 lakh. But there were areas, Hindustan Lever, I made about 56,000. That was also a good one. And MGL, also I did well. I'll show you MGL and Hindustan Lever. So Hindustan Lever or HUL bought it at 2055 and exited out at 2121. But even after that, HUL actually went to about 2200, 2180, 2200. So even after I exited the futures, I was continuing with my hedging positions and I closed them out really well, I think. So 56,000 rupees there. MGL, the problem was MGL actually went down. So even though the future prices went down because of my hedging, it really worked out well. Now, where did things go wrong for me? Now, if you remember, ACC on the cash side, I bought it at 1,330 and I exited at 1,660 or so. But on the futures side, there was a lot of struggle because ACC went up by a huge margin, about 20%, or more than that, actually, almost 25%. So what happens when it goes up by a huge margin like that is the hedging works against us. And there was a huge struggle here in terms of hedging. Even though I actually made on the future price alone, I made about 1 lakh, 1+ lakhs. On the hedging, I lost almost 70,000 rupees, which is why overall I only made about 25,000 on ACC. So you can see when the if you go up, you'll see that ACC made about 25% return on the cash side, okay, which is brilliant. But when it came to the futures and options side, my return was only 4.7%, which is not bad. 25,000 rupees return is not bad. 5% return in a month is not bad, but it was not the best way I would have done the trade. And I've learned some lessons there, which I will incorporate going forward. And here's the same situation with Hero Motors. Hero Motors, I bought at 2,956 the first time, and it was a brilliant exit also. I exited out really well, but then the struggle was I entered again later on, and that was a loss. But what happened was, I think this was Wednesday or Tuesday. I was busy with a lot of things that I couldn't watch the market that closely, and Hero Motors fell almost 7% in a single day. I think it was Tuesday. Because it fell 7%, all my hedges suddenly worked against me. You can see this 3,400 PE, for example. I lost almost 1 lakh on that. So the 1 lakh that I gained on the future side, I lost 1 lakh here. So actually, before that 7% fall, I was looking at almost 1 lakh return on Hero Motors. I ended up with quite a big loss on Hero Motors, almost 35,000 rupees. So that didn't work out well at all. Okay, if that had worked out the way it was supposed to, this return would be probably about 5.5 lakhs, or would be about 11%. So that didn't work out well. So sometimes hedging. Again, this is lessons that I learned. Again, nobody would have seen that Hero Motors would go through that 7% fall on one single day, and it was difficult. I couldn't exit out because I wasn't on the system. By the time I came, it was too late. Then I was trying to see how I could protect that position, and this was a stop loss. That was fine. Hero Motors futures, there was a stop loss at 3060. That closed off, but after that it went down to 2,880, 2,900, and at that time it was difficult to exit because it would have been a huge loss. But somehow, was able to adjust it. But even then, it was not the best trade for the month. So this was again an interesting month. I think there was a potential to do a lot better, and there have been quite a few lessons that I've learned in this month that I really feel I should incorporate into my F&O side trading. Okay, so let's look at what the market is going to look like now. Basically, right now the market is very, very volatile, and that's the struggle. You have to be very careful. I think uh, there have been so many times when we feel that the market is going to rebound and that it has not. Okay, but the week before the market was at 11,790, and then we closed at 11,640. But we did see a support at 11,550 or so. So this support is where I think 11,550 to 11,600 is a good support level that we will be most likely rebounding from for a couple of reasons, which I will explain here. Okay, one is that technically we have found support here. That really helps. And that's the same case for the bank nifty at around 20,000, 23,500, 23,400 range. We found a bit of support. And so the market is sitting there. But again, in the bank nifty, the struggle is there is still the moratorium case that's coming up this week. And so that might cause a lot more volatility in the bank side itself. But overall, for the Nifty, there's a support. Why I say that is because I also am looking at global markets. Now, if you see Dow Jones, which is the US market, it had gone up to 29,000. It broke down to almost 26,000, which was a huge drop again. These drops are not, all of these are because of the volatility, because of the elections. You can see that in the last week, it's gone from about 28,000 to 26. So that's almost 2,000 points dropped over there for the Dow Jones. But again, if you look at these candles, you can see support being formed again and again and again. In fact, yesterday night, I saw the Dow Jones fall and then it closed up higher. So that was a good support level. I thought that it did well. And this is validated by other markets as well. If you look at the UK market, the FTSE, again, you can see how the support is at about 5,500. There's been a bit of support and then it's recovered a bit. The DAX or the German stock, again, at about 11,500 support. It's recovered a bit. So overall, I think you can see that the global markets have kind of found support. That's one thing. Second, the US elections results are going to come out by Wednesday or Thursday. Maybe if there is no clear verdict and if this goes to court and all, it's going to take the volatility will continue and there will be a lot of uncertainty. But if there is a clear winner, with whether it is Biden or Trump, it doesn't matter. As long as there's a clear winner, we can expect the US markets to just rebound back because either way, then stimulus and all of that will come in. Especially if the Democrats win quite substantially, and if they do get the presidency, the Senate, and the House of Representatives, then probably the stimulus package is going to be bigger, which will have a huge positive effect, not just on the US market, but also on all global markets, including the Indian market. So that's something that we got to look for and see what the results are going to be like. But overall, so one is I think all global markets have found support. The Nifty, the Dow Jones, the DAX, the FTSE, all kind of found support. Second, the US results, election results are another thing that we probably can look at. And volatility will certainly die down. Right now, the volatility in the US markets is above 40. It actually touched 40, came down a bit, but 38 is still almost 40, and that's a huge volatility spike. The Indian market, the volatility has gone back to 26 from 28, 20, and 26, 25 is huge, okay, for us. So we gotta wait for it to come back now to 20. Right now, volatility is very high. So those are things that we got to look for. Now, in terms of stocks that I'm looking at, and these are stocks that I've entered as well, you can see that TCS found support at 2598, which is why I put my stop loss around that level. I entered at about 2630, 2640, that range. Again, this was on the F&O side. And yesterday, we saw it go up to about 2,670 even. Now, if you see this channel, you can see that it's kind of rebounded off a channel. So Could TCS go to 3,000? If everything works out well, yes, because last time TCS went to 2,860, and from there it started coming back down. USD INR rate is also improving, which means that IT stocks can really make a lot more profit. So that's a positive cue for TCS. Technically, it's found support and it's going back up. Would it reach 3,000? Maybe. And so that's the play that we're looking at. Okay. Um, and then Reliance. Now, Reliance has been a hard case for a lot of people. Some people have bought it at 2,300. They're stuck there. Some people bought it at 2,200. In fact, I bought it at 2,280 or so, and then stop lost out at 2,250. And then I thought there would be a support around 2,100 when I saw these candles didn't work, went down here. But now there's been support. Also, Reliance came out with really good results yesterday. I mean, it when it was better than the market estimates. Now, the struggle is when you do better than what was expected, when your results are better than expected, sometimes the share price will go down. But again, the stop loss that I put for Reliance is about 1,990, which is quite a far way off. I entered at 2020 or so. 2020, sitting on 40 rupees profit, which is fine. Again, this is on the future side again. I was keeping a very close eye on Sun Pharma, and I saw that rebound at 455. I entered at about 461, 460, 461. And then it actually went down a bit again, but then it closed at about 465. Now, Sun Pharma, again, if you see, was a good break from this levels. There was a good breakdown. There's a bit of rebound. And then, because again, this is on the future side, I've hedged it, so it should be okay. But that's, I'm picking up shares that are really good, fundamentally strong shares that have been beaten down in this current phase. Hopefully, it can go up to a good level. Reliance, picking up Reliance at 2,000 is always a good call. Even if it goes down again, you can pick it up because eventually Reliance target is around 2,500 eventually. Sun Pharma, similarly, we could possibly see 1,000. Not immediately, but maybe in 1 year or so, 1 or 2 years or so, eventually it could go back to 1,000. And so, at 455, 460, I'd pick it up. The fourth share was TVS Motors. TVS Motors, what happened was it broke the trend line, and it was above the EMA support as well. I didn't initially pick this up because I actually wanted to pick it up at 420, 430, rebounded. But the rebound in the morning, that candle was huge in the morning. I couldn't pick it up very quickly. So then I thought I'd be patient, wait for it. And I picked it up once it cut the trend line at about 440, 444, 442, 443. That range, I picked it up. It went up to almost 466. Then it closed in a very weird looking candle. But again, it's above the trend line. And so, again, I put stop losses. And that's a good share to pick up again because TVS is good share. It had gone up to 480 something. So I'm looking at, again, hopefully seeing it reach 480 or so. In fact, my hedges are just about that. So should be okay. So those are the shares that, I've picked up. And also another one is SBI Life. I don't have that on this one. But basically, I'm not trying to go all in yet. I probably wait again till after the results come out. But I thought Reliance was a very good share, timing to pick it up. Sun Pharma, similar situation. TCS was a good rebound. Similarly with TVS. TVS, I don't think I picked it up at a very good price, but it's okay. Should be fine. All right, so that's it. The Q&A side, questions that people have been asking. Let me just quickly go. How are the US elections affecting the Indian market? Yeah, so that's a good question, right? The Indian elections don't affect the US markets. Why are the US markets affecting the Indian market? Well, it's simply because the US market sets the trend for all the markets globally, and the US elections have a huge impact on the US markets. A lot of people have been, exiting positions because they're not sure of what will happen, or they're just going to wait till after the results. So they've been profit booking. And you can see that because a lot of the sliding down has been seen on the tech side. In fact, it's funny because Facebook and Google are making a lot of money out of the US elections. You know, in the last this election, they've put in about 1.3 billion dollars. Actually, it's about the actual price is about 14 billion. They put 14 billion dollars for advertising for the elections in the U.S. presidential elections and the various Senate and House elections. 14 billion dollars have been spent on advertising, either on online platforms like Google, Facebook, and things like that, or on TV ads, radio ads. 14 billion. That's a lot of money. So I can tell you that these tech guys are making money right now, and eventually, they're going to see good results. So the U.S. markets, because people are profit booking there, it has seen the same situation for us on the Indian market side. So I think once the US results come out, I think it'll come down a bit. Now, I keep talking about volatility, and so I think this question was because of that. Somebody asked me, what is VIX? So VIX is basically the volatility index. We have two indices that we follow when it comes to volatility. One is the CBOE, or the volatility index for S&P futures, which is the US market. And you can see that it has gone up. It had come down to 20 something. So normally 20 is a good, safe level. You can see that it spiked to about 80, 90 during the pandemic for March, right? But now it's spiked up again because of the US elections. You can see how these candles, these last 3 days, have spiked up huge. Actually, the last 5 days, simply huge spikes in the volatility. From 20, it was at 26, it jumped to almost 40 in 5 days. But I can tell you, once the US elections results come out, and there's, if there is a clear winner, this will fall down. Volatility is simply because of the closeness or the proximity to the US elections. But similarly, you can see how it's affecting us. Okay, we've been in a safer place. The Indian volatility index was in fact almost at 15 at one point, but now it's shot up to almost 26, and that's a struggle because it is so difficult to trade. If you've been watching the markets, you can see the market go up and down, up and down, up and down. It's crazy, and it's so difficult to even, there's no clear trend. You cannot make out a trend sometimes, simply because there is no, and that's simply volatility at play. So again, it's safer to just wait for the US elections to get over and start entering shares. By that time, a lot of really good shares would have been spiked down quite a bit, and it would be easier to make good entries. But how does volatility affect trading? When it's very volatile, prices will move randomly. There's no clear trends. It makes it difficult to analyze where the market is going. And I've been telling, sometimes I don't even know what the market is going to do today, simply because that's what volatility does. There's no clear trend. So volatility can really affect trading. Now, some people make money out of this. Okay, when volatility increases, the option premiums go up. So people who sell options, it's a good time to sell options, because once volatility comes down, these option premiums will come down very quickly. And so even if the price does not move, suppose you sell an option premium when the volatility is very high, so the option premium is very high, and the volatility comes down, the option premium price also comes down very quickly, and you can make a huge profit. That can happen a lot. And so that's the struggle there for us. Now, I've been telling people, this September was difficult, right? There was a huge crash. October was also difficult because of the huge volatility. Yet, you've seen KWC has been regularly outperforming the market. And I want you to know that that partnership plan is probably a very good thought for people if you invest into KWC. And again, this would entail a investment loan into KWC of minimum of 1 lakh. you will have a 12% interest. I'll be basically paying you 12% interest when you invest into KWC, which is what people invest into companies all the time, not on buying shares on the market, but they invest into startups, invest into companies because they see a good return there. I think this is a very good opportunity for people who are interested. You can see how it compares to just 3% if you put in a savings bank account, maybe 5 to 6% in FDs, maybe if you're lucky, 10% in your SIPs or mutual funds. But again, you don't have the stress. You don't have to endure all the stress, and there's no fees, there's no penalties, there's no term limits. You have to lock in periods. None of these when it comes to KWC. So I'm trying to make it as easy as possible for people to find a safe haven or a safe place to invest well. And this is one. I think I know KWC has grown so much from that little baby that started in May. It has grown so much, and I'm really genuinely wanting to help people if they want to partner with KWC. It'll do well for them. All right. So if you have any queries or questions, please do remember to WhatsApp or contact me at 9495974264. Please do remember to subscribe to our Kingdom Wealth Creators page on YouTube, and also remember to follow our Facebook page. And anytime you have questions, I want you to know that we are there to answer it. And trading has never been this easy now that you have KWC. Thank you.